everyone, welcome to a new video, RRG video for the week starting July 15th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam. Interesting start of the week. Market just closed and so here's the sector returns, and you can see a massive difference between energy, which is up 1.5%, and utilities, which are down 2.4%. Big changes. So what that means to me, or what that tells me, is a big diversion between the returns of sectors, and that means that there is a lot to gain from sector rotation. That's the good news. The bad news, or well, news that hasn't changed, is that when you look at the sector rotation using the RRG, and let's start with the weekly version here, you can see that this image is pretty much what we've seen over the last few weeks. It's technology powering into the leading quadrant and pretty much everything else moving into lagging. And we have utilities rotating out of leading. That's still kind of okay. And we got two kind of green shoots here with real estate and consumer discretionary, which are starting to push into the improving quadrant, but they are still at very low readings. So with all of that, well, let me give you a little quick view on the daily, because you can see there how that diffusion is working. You can see how consumer discretionary has already started to roll over inside leading, and how technology was trying to push back into the leading quadrant, but then all of a sudden hooked back to the left. The weakness for communication services has been confirmed now. Those are both on the weekly and the daily pushing into the lagging quadrant. But what's more interesting to see is that utilities, materials, industrials are picking up on the RS momentum scale, and especially financials and real estate are seem to be improving. When you go to the weekly and look for financials and real estate, they are still, let me highlight that. So here is financials and here is real estate. And real estate is on demand. Looks to be going in the right direction, but it's very early. We will take a look at the interest rate charts in a minute, and financials and real estate obviously very sensitive to interest rates. So maybe there is some good coming from that area. What I wanted to say is that because this didn't really change, and my view on the foundation of the market is still there. Today was a good day. I mean, we saw a little bit of broadening. That is for sure. But it's only one day, and I'd like to see a little bit more. And for those of you who love the analogy of the remodeling of my office here in our house, which is, by the way, turning into, well, not a complete nightmare, but it is a lot more than we thought it would be. Maybe one of the next weeks I'll share a few additional photos with you, because people seem to be liking that. But like, just with the analogy with my office, we started to improve the foundation, and we put in some stuff that improved the foundation, and it looks, by the looks of it, just one day, that the market is trying to do the same. But for me, it's way too early to make that call as being definitive. So I'll leave it at that. As I said, I don't want to go over all the sectors again, because you know that we've done that over and over again. But what we did not talk about very recently was asset allocation and a few other things. So let's bring up the RRG for asset allocation. And when you do that, you see a pretty distorted picture, and that's because of Bitcoin. Bitcoin is way out there. So let me, we'll look at Bitcoin in a minute, but we'll take that off for now to make a RRG that's better visible. And what you see here is actually very interesting, because the best asset class on this entire RRG is the S&P 500, is the stock market. And what you also very clearly see is the rotation out of favor for commodities. This GSG and DJP are commodity ETFs. And then you see HYG rolling over, and here are LQD and GOVT, government bonds, kind of rolling over, government bonds rolling over, LQD kind of sideways. And then there is the US dollar that has started to weaken. It's rotating back out. So from this point of view, the stock market is the place to be. Still the place to be, or again the place to be. Because if you look at the rotation, you can see how stocks rotated out of favor, never really made it into the weakening quadrant. Look at how that tail shrunk. This is a 5-week tail for every asset class. And look at the tail for the S&P 500 for stocks and compare that to the length of the tails of all the other asset classes. So what this means is a very stable uptrend in this universe with VBINX as the benchmark. And just recently, it's now starting to get out of that short tail and starting to pick up and move at a positive RRG heading again, at least in this universe and against all these others. So from an asset allocation point of view, it's very hard to justify not having an allocation to the stock market in a portfolio. And that's what this graph actually tells you. What this also tells you is that the stock bond comparison, the stock bond ratio is still very much in favor of the stock market. So here is SPY IEF. This is the channel that I've got this penciled in for like, I don't know, months already. And it's still working its way higher within this trend channel. And obviously that's a good thing, but the potential negative divergence is still looming over this trend. So yes, we're still going higher. Yes, the stock market is preferred over the bond market. But remain cautious. What it also shows is the lack of strength for commodities. And it seems to be getting worse, actually. So if we bring up charts for commodities, and here is DJP, you can see how the attempt to break out pretty much failed miserably. And we're kind of completing a toppish formation here, and we're on the way back. We're still at very good levels compared to 2020, but in all honesty, I had expected this to be a base for commodities and for them to start moving higher and actually challenge those high around $40. That's probably not going to happen anytime soon, because this looks way more of a situation where we will see lower commodity prices rather than higher commodity prices. And if we do the same thing for GSG, then you will see that this one didn't even manage to break out above that range, and it's kind of moving sideways. But if you look at the relative strength, both of them are definitely now in relative downtrends versus VBINX and versus the other asset classes on the graph. When we move over to the bond markets, let's look at GOVT here. What we see is a pretty big sideways consolidation and a price that is trying to break out of what looks to be a triangle formation. And that would be a positive breakout, an upside breakout. This is the price of government bonds, so it would push the yield down actually. So that would be supportive for stocks in general. And if we look at the same chart for IEF, you'll see a similar picture. Also trying to break out above that last high. Higher prices in the 7 to 10 year treasury bond means lower yields. And that is what we bring in when we look at the 10-year yield chart. You can see how that is trying to break this rising support line. So all in all, we have a situation where the stock market remains or is again the strongest asset class. In the bond market, we see a situation where on the RRG, the tails are rolling over which means relative underperformance versus VBINX. But when you look at the price chart, you see that bonds are actually trying to break out higher, which would push yields down. And that's where you need to realize that an RRG is a relative chart. So the rolling over of the government bond tail does not necessarily mean that the price of government bonds is going down. It's just going, it at the moment is going up, but it's going up less than the rally in the stock market. That's why the SPY IEF ratio is still in favor of SPY. And that's why the tail of SPY is moving into a positive heading, and that's why the tail of GOVD is rolling over. The other tails that we saw, important one is for the US dollar. The US dollar index is actually rolling over into the lagging quadrant, which is US dollar weakness. And if we bring that to a price chart, then we see the dollar index here also in that big triangle-like formation. It's challenging that rising support line. But if you look at the relative strength, that's actually breaking lower, and you see those RRG lines rolling over as well. And when we bring that to the price of euro dollar, we see the reverse. So the rising chart here is strength for the euro, weakness for the dollar, which is obviously what we see on that euro dollar index chart. But here also you see weakness for the dollar. It's still a bit early, but if this happens, I expect euro dollar actually to rally further and go after the highs around 110. And that can happen in the next few weeks, maybe months. It's 100 pips. It could go very quickly if some sort of a news event breaks. If we look at that on the daily euro dollar chart, you see it a little bit more detail, and you see how it is pushing against that 109 resistance level. If that breaks, the way is open to, this is 109.80, this is 110. That'll be the next major resistance level in euro dollar. But all in all, it points to US dollar weakness, and that makes it in the asset class RRG one of the weaker asset classes, pretty much just like anything else. The only one that's really strong here is SPY. Let's bring Bitcoin back into the equation, and you can see how it is way down here at the bottom, and it's coming from this huge rotation through leading. So it started to really pick up, and this is 30th of October 2023, and you see it's rolling over, going through weakening, going back up, going to weakening, and we're now heading towards lagging. But when you look at the price chart of Bitcoin, then you can see how that has kind of stabilized. And here is the weekly chart of Bitcoin versus the US dollar, and you can see how we failed to break to new highs here around 73,000, coming off of that resistance area, and respected that support zone around 52,000, and we're bouncing back off of that support zone right now. Not sure whether I can call this still a series of higher highs and higher lows, because this low here was broken, which was potentially a big double top, but it looks as if that was like a false break, or it reversed its move back up. If you look at the daily chart of Bitcoin, you can see how strong that move off of that support area was, and basically also how nicely that positive divergence actually executed. So the next, we're at resistance here around 64,000. If we can take that out in the next couple of days, then I believe that Bitcoin is on the way back to challenge that resistance zone just above 70,000. So with that being said, let's take a look at an RRG for crypto. I don't know how many of you are actually using that, but if you scroll down the list, you will find a set of cryptocurrencies, and we can do that against the US dollar, or we can do it against Bitcoin. And what I like to do is do it against Bitcoin, because I use in my asset allocation RRG, I use Bitcoin as a proxy for the cryptocurrency asset class. And if you load cryptocurrencies versus Bitcoin, you will basically, it's the same as, SPY is stocks, and then the sectors are the breakdown of SPY. What you see here is Bitcoin is cryptocurrencies, and here you can see, you can zoom in to a group of cryptocurrencies using Bitcoin as the benchmark. Now, obviously, there are, I don't know how many coins there are nowadays, like probably over 2,000, 2,500. This is a group with decent turnover, decent volume, but feel free to set up your own RRG with the currencies, the cryptocurrencies that you like to track. But what this tells me here is that because everything, well, majority is to the left, is that Bitcoin is the strongest. It is leading the market, but a lot of them are starting to pick up. So they're trying to catch up with Bitcoin. And that's what you know, over the last few years, always see that Bitcoin is the first one to move. And then you get the alt season. So this is like, these are the altcoins that are following Bitcoin. And the most notable moves that I can see now on this RRG is for Ether, because here the green one is ETHUSD. It's the only one that's moving into the leading quadrant. So Ether is now actually starting to outperform Bitcoin. And it looks here that Uni is a very interesting tail, and that is Uniswap. And look at that tail. That is actually proving to be an interesting rotation. But this can help you to actually search and look for potentially interesting cryptocurrencies to play if you want to be a little bit more adventurous than just look at Bitcoin. Another RRG that I want to bring into the mix and bring to your attention is the one for bond maturities. So this RRG, which is also a selection in the drop down, shows the various maturities of the US yield curve, longer end to shorter end, and it'll tell you something about how the yield curve is moving. And what you see here is that the longer dated maturities are showing a positive rotation towards the leading quadrant. So that means that they're outperforming the shorter end and going up in price, which is what we saw on the price chart. What you see on the other hand is that the shorter dated maturities are going the other way. And what this actually shows is this is a weekly chart, so it's like a longer term view, is still a flattening or renewed flattening of the yield curve, because the longer end, the yield is coming down, and in the shorter end, the yield's going up. Now, in the very near term, when you look at the yield curve chart, which is the 10-year yield minus the 2-year yield, you will see that it is actually steepening. So this RRG hasn't picked up this move here, but when you look at the weekly, you can see why, because this is still in a, we came out of this. This is the move that the RRG is showing you, the one that is still showing the move towards renewed flattening, I should say, because the yield curve is still inverted. It's still below zero. Normally, you would expect 10-year yields to be higher than 2-year yields and have a positive difference. That is still the other way around. And that's for quite some time already, since the middle of 2022. 2-year yields are higher than 10-year yields. And the trend is still for that to continue. Maybe this is the first green shoot in that move higher, and then we will see eventually these rotations move the other way. But the longer term trends are still in favor of the longer end of the yield curve over the shorter end. Very interesting metric to keep an eye on. And as I said, that 10 to 2 year, we're still inverted, and the very near term is picking up. But the lower high that was being put into place, that's what you see happening on that RRG. And then finally, the RRG that I want to wrap it up with is the breakdown of commodities, because we saw the asset class commodities. And if we break that down into various groups, we can use the S&P GSCI groups for that. And you see them loaded up here. Again, this is also a predefined list on the RRG page. And we're using GNX, dollar GNX, as the benchmark. That's the GSCI commodity index. It's the entire group. We see two groups that are potentially interesting. The first one is GJX, that is the energy index, and GPX, which is the precious metals index. So even the fact that the commodities as a whole are rotating out of favor, within commodities we could take a look at the energy complex and the precious metal complex. And if we bring that to a price chart, we've got GJX right here. This is the weekly chart, and you can see how that is basing out against GNX. You can see how the RRG lines are picking up. Obviously this needs more work in terms of price, but it is potentially an interesting group. The other group that is potentially interesting, or probably more interesting in my opinion, is GPX. And when you look at that, you can see how that is actually moving in a very nice upward direction. Look at the relative strength versus GNX. Very stable RRG lines. But it becomes really interesting when you make it a very long-term chart and look at the monthly price chart. And I'm going to make this a monthly chart and a little bit more condensed. Then you can see how this is actually breaking out to all-time highs that go back to 2011. And we've had the first move, a little bit of a correction, and we're now pushing higher. So precious metals, gold, silver, are really doing well within the entire commodity group. So within commodities, energy and precious metals seem to be the place to be. So wrapping it all up, starting from an asset class point of view, we see stocks, SPY, as still the strongest asset class. We see bonds, government bonds, rolling over. In terms of price, they're doing well. They're probably going to push yields lower, but stocks are still beating bonds. If you look at the rotations of commodities, they are rotating out of favor. And that is, from an asset class point of view, not good. We just looked at the RRG for commodity groups, and we saw that energy and precious metals are two groups within commodities that are doing reasonably well, especially on a relative basis. We also looked at the various maturities of the US yield curve. Notice that the longer term trends are still pointing to a flattening, or again flattening, of that yield curve, despite the fact that the near term is actually showing a steepening. But that's really near term, and we need to wait and see whether that's going to mature and whether that's going to turn that longer term trend around. Anyway, I hope I gave you a little bit of insight from a higher level, from an asset allocation perspective. The story remains the same. The stock market is still the most interesting asset class in the group that we discussed. It remains at a narrow footing. That story didn't change. It looks to have a good day today, but we'll need to wait and see how it develops. And I'll talk to you about that next week if anything new is to mention. Thanks for watching. I hope you enjoyed the show. Please let us know in the comments about your thoughts or feelings or whatever you want to share. I'd like to answer them. And after that, I hope to see you back at a new episode of this show next week, same time, same place.